Hey everybody, Jonathan Lowe here from the 2018 30K Challenge. Today we're going to do a trade review of MU earnings, and there's a lot of great stuff here for those who like to day trade. This is going to be really about day trading earnings plays. But before we get started, as usual, I'd like to cover the disclaimer. I'm not a professional advisor, do not have a degree in finances. Overall, I'm not a profitable trader. This is for educational purposes only. I'm not making investment suggestions, nor should anything you see, read, or listen to constitute or imply any investment advice. So we seek the counsel of your professional financial advisor before making any investment. By viewing this video, you agree not to hold Jonathan Lowe or any of my assets liable for losses that you encounter while trading the stock market in any form. This is just my theory based on my own experience. All right. Well, anyway, before we get to the charts, these are some of the things that we're going to be covering. I've showed you guys how to draw pre-market lines, but we'll do it again. I'll show you how to draw daily lines, and we'll do that again. Then when we get into the trading, the actual after the market opens, we'll discuss about spotting out major levels, um, trading major levels, different trades that are available to take, the opening trade, the late morning trade, pre-market macro pivot trade, and a couple of VWAP trades, and then I'll give you my closing thoughts. So before we do that, let's pull over a chart of MU before the market opened so we can draw out some levels here. Let's see here. So the first levels I'd like to draw from the very beginning, one would be the red to green. I want to know where this closed. Okay, that's where it closed. Then I'd like to draw the pre-market high and low. There is the low so far right there. There's the high, which is right about here. Then I like to draw the pre-market macro pivot. Now this is sort of, how would I say, it's not an exact science. That's how I'll say it, okay? So we had a dip down. It came all the way back above the red to green and then started coming back down again. So I see a couple potential macro pivots here. Right here would be a potential pre-market macro pivot. And as it comes back here and spikes back down and falls, I'm going to mark this as my pre-market macro pivot as well. Okay. And then from here, as you see it go down, doesn't go all the way down to pre-market lows, finds support, comes back up, and then I think we get into the open here after right around there we get into the open. And I guess this could be a certain level, but I never ended up marking this. Okay, so that's pretty much it. Oh, the only other thing I do is that I take a Fibonacci line, and the way since we're down for the day, I draw out percentages going down. I think percentages do have a big play when it comes to earnings plays. So I like to know the following percentages from the red to green, up or down. So since we're down, I want to know from red to green, 5% down from there is $56. 7.5% down from there is $54.53, and then 10%, and then 15 and 20, even further down. Okay. So now that I've done that, let's take this off, and I'm going to take another screen And let's go to, actually, let's keep this screen. And let's just go to a daily chart of this, okay? And then we're going to erase this one day here because that's the day that we traded. So if I were to trade this level here, okay, so here's some things that we got to see here. Okay, so I like to mark where the 9 EMA is for the day, and if you can tell, it's like right there. So the red to green and the 9 EMA are pretty much like married to each other, okay? And then I'll adjust this to make this a little bit easier to read. So they're right next to each other. Then I like to remark the 20 EMA. This line, this new line I just added recently is just a Bollinger Band. So it's just the average price of where the stock is on this given time frame. Okay, this is a daily time frame, okay? And I don't think, here's the 20, no, that's the 50. 50 SMA, 100 SMA, and I personally do not think that these are going to come into play, but I always mark these out on whatever chart I'm trading, whether it be swing trade, day trade, whatever trade I'm making. I want to know where these levels are because they're very important. Okay. I guess the only other thing that I could mark off that I didn't mark off before would be the high and low of the day before. And so we'll do that on this one and see what happens. So let's switch back to a 5-minute chart. That's the day we trade. And there's all your lines there. And then let's just jump over here. We'll just jump over here for now, and then so you can see all the levels. And just looking at I know what the colors mean. High of day, low of day. This is the 9 EMA. Red to green line where it closed yesterday. Pre-market macro pivot, potential areas of support and resistance from the pre-market area that do come into play during the trading hours. The 20 EMA, pre-market low, and then way down here we have the 50, 100, and then the 200 way down here, which I do not think is going to come into play. Most of the earnings play, they wind up somewhere during the day between 12 and 18% around this area here, okay? And so this is really strange price action to me. It's not really what I like to trade. But when you are considering day trading a chart and looking at it, evaluating during pre-market, you have to look at the volume here, and we really need, at least 50,000 shares, 60,000 shares of volume here. I mean, we got, in total of pre-market. But if you look at this, I mean, just this one 5-minute candle is 200,000 shares. This is another 200,000, 240,000 shares. So this is definitely going to be in play. I might be a little bit sloppy the way it plays out, but this is definitely, a lot of day traders are on this right now. So this is, sort of like follow the money. This is where the volume is. This is where the traders are going to be. This is where you're going to see volatility and price action bouncing off the lines that I've marked out here. All right, so let's get to it. I'm going to reduce this and bring up another chart here. Same chart, but it just makes it easier to see. This is a 15-second chart, and that's the 23rd. And let's open this up here. Let's adjust this lines. What time is it? 9:35. Properties. Let's go 26. this is what we call a snapback trade. I learned this from my mentor. Um, it's not pulling up the data here, but the market opens, and this is 15 seconds. Every 15 seconds, a candle prints here. Um, is this the right day? Yeah, it looks like the right day. So it doesn't show here. I guess we're having a little trouble with data here, but I believe within the first 15 seconds, we have like over 1 million shares of volume. Let's pull up this MU chart here real quick while we're waiting for that one to load up. But within the first minute, we have 2,183,483 shares traded in the first minute. That's huge volume. This is definitely where the day traders are. And actually, let's take a look at a daily chart on MU just for comparison. And I guess as you can see, if that's around the average, yeah, we got above average volume, on MU. Maybe not these days, but on this day we have above average volume. Okay, so let's get rid of that. And there's a 1 minute. Let's see if this is pulled up. 15-second chart is not giving me what I'm looking for. So let's just get back to the 1 minute. All right, so you're not gonna be able to see it very well, but and within 1 minute, it goes from 57 up to 57.38 up to 58.80. For some reason, when I day trade, the numbers 80 cents and 20 cents do come around quite often. And so I saw that and it started to reject. I really wanted to try to wait for it to get up here and reject and take a very small risk. Maybe my stop will be above 59 and I will get in, right around, 58.90, 58.95, 5-cent risk for, several points down. But, the first, within the first minute, and in fact, let's go back to the 15-second chart here. Within the first 15, 30 seconds, 45 seconds, within 45 seconds, this thing already went up 57.38, right up to, 58.80 and then began to reverse. Oh, there it is. Nice. Thank you. Let me reduce the, let's see again. Is this thing locked here? I don't know why I can't move this around. All right, whatever. There's the volume there. So it shot up, and it goes up really fast. And these snapback trades, they come back really fast too. So it doesn't creep up slowly. It goes up, it finds a spot, and then it starts reversing. So you gotta know what you're looking for to take advantage of this snapback trade. Okay. And this is what it was. It went up as it started getting weak, came back up, got red. Probably around here, I probably should have took on a snapback trade, maybe 25, 50 shares around here. And, if it cleared above here, maybe at 59.50, get out and then reset. Maybe it goes to 60 and then, you can reset here and go back down. But this is probably the most obvious spot for a turnaround, especially with the daily 9 EMA and the red to green there on earnings play. So, I did get in probably right here for just 50 shares. And, it was just moving so fast. I didn't add back. I was just too scared. It was going to come down here and then fire back up, and I didn't want to. I wanted to use risk management. I just did not want to risk getting in too heavy and then it going against me. However, reviewing this, this is an area I have to grow in. I have to grow and learn, to take this and maybe add a little bit more, and then, cut it loose if it starts coming back up. Because these snapback trades, once they start falling back down, they fall back down, and hard too. So, even though I got in at around 58.36, my stop was 60 cents away, 70 cents away on 50 shares. It's nothing. I should have just took 100 shares, and that would have been 70 bucks. And within a few minutes, that $100 could have turned 58.34. Probably took some off here, probably, and maybe take the rest off here, because after a 4-point drop, it should come back and consolidate a little bit. So, but then I guess it didn't, and it failed even further. Wow. So what you're looking at here is from 58.64 all the way down to here. You're talking about, I think it was like 5 points. 5 points by 9.48. So that's a great move. And this is something that you need to be able to have hotkeys on to day trade. I really don't believe you can do it's too risky with options to be able to do this. So something that you could push one button in and get in, scale in, and then push one button and get all out, really fast. That's the way you're going to be able to manage your risk when you're day trading, okay? So this was the snapback trade, and you can see that this pre-market macro pivot was held some support. It could have went down, held support, and went back up, but as soon as the 15-second came down, and the 9 EMA on the 15-second pushes it through. We got a little bit of resistance on this macro pivot, as you can see. So these are legitimate lines that I draw out, okay? And then we get this drag out through here on this 5-minute at this $56 level, right? You guys see this? I mean, it's very plain to see that there is some consolidation here on the 15-second chart, okay, at this $56 level. Remember that. That's going to come into play later on. So now that we're sort of done with that real quick snapback trade, let's go to the 1-minute chart now and see what this looks like, because you can't really, it looks really obvious on the 15-second chart and not as obvious on a 1-minute chart, okay? So let's open this up a little bit more. And on the 1-minute chart, you see it pauses here for a second. 9 EMA pushes it through. We see the 15-second really push it through, right? Really nicely. And you're definitely going to have to use in the first half an hour of trading on these day trade earnings play or news plays. You're going to want to use the 9 EMA on the faster time frame, usually the 1-minute and 2-minute. After the first half an hour, 45 minutes, you can start using the 5-minute 9 EMA, the green one, to use as a line to trade, especially when price action comes down and then fails this level. You can say, hey, if price gets above the 9 and this pre-market macro pivot, I'm out. I can take a trade short here and risk 30 cents and possibly to go down to the 20. Hopefully we just break through this and then we get down to here. So you're going to risk 20 cents to make $3 there, almost $3. So that's a good risk versus reward. I was not mentally ready for this. I think I took I think most of my profits off of here, 50 bucks. I made like $80-90 in this trade because I thought for sure it was gonna hit support here and go up. And since I only had 50 shares, I wanted to just take profit. But hey, that would have been a great trade. I mean, 250 bucks on 50 shares, and I'm trying to think of how I would have traded it better. And really, I think the best way for me to have traded it was looking in hindsight. Is one, I added 50 shares here. I'm profitable, almost 50 bucks here. As it breaks this level, I should add another 50. So then my average price would be right up here somewhere. And then as it breaks this level, add another 50 or 100, which would probably lower my break even to maybe about 58.38. And as I am lowering my average cost, but I'm adding shares, being more profitable, and this would have been even a better flush down here. And yeah, I could have, done really well here with, just entering 50 shares here and slowly adding as I go down, if I wasn't really sure what I was doing. I know my mentor, he would have entered, a couple hundred shares here, and by the time he saw this, he would have been probably in it for a couple thousand shares, and took profit through there and just wiped this thing out because he's very comfortable taking this snapback trade. Okay. Um, Now the next trade I want to talk about is there's this one here where it finds the bottom here, so you can mark this if you want. Here's high of day, here's low of day for now, and here's VWAP. We could try to take a trade off of VWAP, which I think I did in real life. I made some money here, um, but as soon as price action started changing through here, I was pretty aware of it, and I'm sure I just got out because I wanted to protect my profits. Um, and then as it came back up through here, okay, and I want to talk about this is the next trade, like a late morning trade. So possibly, in this one, it usually doesn't fail back the first time. This is a great push down. The first push down doesn't work. Possibly the second one. I see consolidation on this $56 level right here. So these 9 EMAs coming up on the one. It can't hold above 56. And it's in between VWAP and 56 here. This looks pretty darn weak, so I'm thinking it's going to turn around and go down. So I start building a position short. I'm probably like 200-300 shares short right through here. And as I look at price action, I see this, and I see the 9 coming up. I don't like it at all. I'm gonna get out because it's just over time you'll be able to read this, but this should begin to fail. If it was really gonna fail, it should have failed here, But because this thing started getting green, I said I'm out, and then I sort of zoned out and I gave up on this trade. And what I should do is be ready because I know this is a significant level. This is a 5% level and $56. We know that there's a bunch of buyers and sellers here, right? Because we had a bunch of buyers and sellers over here, right? You guys see that? As 5% level is a very important earnings play move. 5%, 7.5, 10, 12, 15. So this 5% level, there's a lot of battling going on. And here, the best thing to do, in my opinion, is to be ready to trade either way. And if you trade to the short side, right, you're probably going to get down to this level. 54.82 is your first target, and your next target is 53.69 or 68.69 here, right? So at $56, you're risking 10, 20 cents, and you're hoping to get all the way down here. So you're looking like almost a $2.20 for a 20-cent move. That's easy, 4 to 1. Okay, but be open because this can easily go back up as well. So let's look above. What are we looking above here? If we go long at 56, we can say, hey, our stop would be below VWAP, which is about 20 cents. And a 4 to 1 would just be $1, or a 5 to 1 would be just $1 away. So that's 56.65. That's almost almost 3 to 1. It's not really great. And we got a little bit of action here on that, but not that much. But I think we got more action right up here at 57.38. So hopefully I would think my target would be up here. So if that was 56 to 57.38, that's $1.38. If I'm risking 20 cents That's, 5, 6, almost 7 to 1, which is a great trade. And the only thing we have to beat would be, this 100 and the 2 and this macro pivot for us to get a good shot up to here. Okay, so I got out here, but I wasn't thinking. There's a spike up. We know for pretty much for sure, I know it's going long. Okay, so at this point, I'm out here and I'm just thinking short. So I just zoned out and I said, okay, it's not going short for a while. It's going to be going up. I said that in my mind, but I didn't do anything about it. So what I really should have done once this trade did not work out and I was confirmed wrong, I really should be looking for a retest of $56 and get long when it rejects. Okay, that is my growth that I need to do. So it goes up and boom, there goes down. And there it is. There's your retest or about to be retested of 56. And boom, there is your retest of 56 right there to the penny. You could be long here, maybe you're adding a little bit, retest here, and now you're long. So, even if you added back here, this 13 cents, that's, you can add back a couple, 100 shares, a couple hundred shares here, and if you get stopped out, you're still only down, 80 bucks, because it's a real tight stop. And you got VWAP here and stuff. So, you could use this $56 as a level, or if you take smaller shares, and you could use all the way down to VWAP, because it could easily come down here and go back up, but it doesn't. Has strong move, goes right up. Now we want to follow the 9 EMA on the 1 minute as a way of managing it. Blows right through here. Retest this, goes back up. Hey, who knows? You could possibly add through here. You're already long. Maybe you took some profit here. It comes back down, starts taking off again. You can add back because you're probably clear to go up to this level here, especially after this clear is here. Oh, that's a scary one. I probably would have got stopped out. Stopped out. I'm out. And then I'd be like, ah, crap. I missed it. I got spooked out. You hear me say that a lot. But here, we start getting some price action against this 57.38, okay, which is, I think, a good signal to get short. You don't really see it much here on this 1 minute chart. So if you go back to a 15-second chart, if I can find that level. On the 15-second chart, this is what it looks like. It comes up, on the 15-second, ba-bang, 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 comes back down, comes back up. I was thinking about getting short, and I didn't. Then it gave me one more chance. I thought about it. I was going to push 400 shares, and I just didn't do it. Then it just sailed away. And this is the power of this pre-market macro pivot, because this is, obviously this line was very well respected, and I could have easily made my stop, 400 shares here. If it spikes above here, I'm risking 31. If I get around 31, 30-ish, and I get out, let's say at 50, 20 cents, 20 cents times 400 shares, 80 bucks. It's not that, bad of a deal. If you don't want to risk that much, do 200 shares and risk 40 bucks. It's not that bad. But look what happened, just flushed. And I actually did take this, I believe, in my demo account. Almost swore I did. Yeah, I think I mentioned it in the chat room. So anyway, you don't see it much on the 1 minute chart. Happens really fast. On the 15-second chart, you can see, there's some really good resistance here. Okay, so going back to the 1 minute chart, playing it forward. Yep. Yeah, I guess you could see it on the 1 minute chart, right through here. And then just sailed down. I took a little bit of profit, and then I messed up my order. After I took a little bit of profit here, I think I took some profit at 50 cents. On my demo, I took 400 shares short. I took off half at 80-cent profit, and then I set my arrange order to get out at break even or when it hits 56.20. And so later on, when it hit 56.20, it took me out of the trade. I really should have put this thing even lower as my lower range stop. But anyway, I ended up getting out, made 480 bucks in my demo account, and and then by that point it's too late to get back in because then you're risking more money, more commission. So I said forget it. But if you look at it, end up going down even further. Okay. So now let's talk about this VWAP trade. Let's go to a 5-minute chart. So let's reduce this. Let's pick up my 5-minute chart here. Pull this up, and we'll go a little bit faster now. This is the MU trade. Let's see what's going on here. Sorry, guys. Let's go back to, let's go to this one. This does not look right at all. That's the 22nd. No wonder why. Okay, here we go. 23rd. X this out. Sorry, guys. All right. So here's a rejection off of here. We're later on in the day, so we need to use, if we're going to enter in any more trades, we want to use the 9 EMA on the 5-minute chart here. I like to trade off a VWAP. Here's the next trade. It breaks VWAP, comes back up, finds resistance at the 9, pushes back down, breaks again, VWAP holds, comes back up, and begins to fail. Enter here. Your stop is above the 9 EMA. You don't want to go short here on the first break because the 9 EMA is too high. 56.41, 56.01. You're talking about a 40-cent stop. Let's wait a little bit longer, get more confirmation that it's going short. You enter here with a stop above 56.13, 56.15 or 20. You could even say, hey, if it stops above 56.41, you can go up there if you really want to. If you take 100 shares and you want to risk 40 bucks, you take 200 shares, you want to risk 50 cents, you can make it a little bit lower. And then you get this really nice flush through here. You're at the 7.5% level. You see some resistance. Hopefully you're taking some profit. You're just holding. Maybe take some more profit here. You probably set, and once you take profit here, you can let this sort of work back up because you're in a profitable trade. You're not going to lose money even if you stop out at break even up here, and you can wait. Take some more profit, maybe down here as you see price action, not fully, going down. This is what, 54, near $54. You got in at 55.93. Let's say let's make that 56. You take profit at 56.50, 55.50. You take profit at $55 right here, and then you take more profit at 54.50 ish right here. So you're at this point you're only in a quarter of your position. If you enter here, you take half, take another half, and then now you could and you're waiting for 54 to take the last part. Maybe you didn't. You're only in a quarter. Here it comes back up to VWAP again right here, retests, and then this is another trade you could have took. Because it's probably gonna not make higher highs, it's gonna make lower lows from here. So good risk versus reward. You see VWAP here. You enter in maybe another 100 shares, so you have a quarter left. add back 100, stop out on everything at, maybe above VWAP or above this, 5-minute 100. And so you're going to be risking 55.69. It's a 55, you're risking 15 cents. You're going to add back 100 shares off of VWAP, hopeful VWAP rejection, and you're only risking 20 bucks, 30 bucks. And you add another 100 shares here, and from 55 down 55.60, so that's another $1.50. So you can exit out, half here, half at 50, another half at 50, and whatever you want to do, and pretty much that's the end of the day. So that's it, guys. So let's go back and review a little bit. I know there's a long video. There was a lot of good stuff to take note of, and once again, hey, we reviewed. So closing thoughts. Here's the closing thoughts. Like to follow the money strategy. Day trading, we need to follow where all the day traders are, because they will be trading off of the technical lines. Okay, I'll have to adjust that. Sorry about that, bad English. But they'll be trading off the technical lines and exponential moving averages, as you saw on this video and on the chart. All of my favorite setups were found on this chart, so you could have traded this, all day long if you were patient and waited for your setup. The pre-market macro pivot trade, the pivot point trade at 5% at $56, and you had 2 VWAP trades. So, and based upon really how much money you wanted to risk, you could have made hundreds of dollars or thousands of dollars, depending upon just how many shares you wanted to take. Okay, and the things that I need to work on for the next for future trades is really I need to work on the snapback trade. Really define my risk versus reward and find some way to not let this 5-point drop go without me, and me only taking 50 shares and profiting 80 bucks. That's ridiculous. The other thing is that I need to stay open-minded to what the price action is saying. At the pivot point where I made that $56 trade, where I got out before it went against me, I should have, in my back of my mind, I knew it was going to go long. I should have just waited for a retest of 56 and got long with a small stop, with a small risk, and good upside potential for about $1.50 up to the pre-market macro pivot. And that's also, the last part too is, yeah, when you are making a trade at such a huge pivot point, you want to be open-minded to be prepared for a long trade or a short trade, especially at the VWAP area. At VWAP area, things will go off it and go down, or it'll go up, retest, and continue up. And so those are great things, great areas you can make trades off of. Anyway, that's it. I hope you like this video. Hope you got some good information on that. Hey, you go to focustrades.com, sign up with my buddy Taylor Horton, and you can follow what he does with the follow the money strategy, swing trading using options. It's really awesome. And if you go to Tastyworks, you can use my referral code to open up an account there. I would appreciate that. And please come back and leave some comments and hit the like button. All right. Talk to you guys later. Bye.